Welcome to the Passive Income Podcast. I am your host, Dividend Dave. And let me start by saying the best job I never had was when companies started paying me to not work for them. My guest today is JR. JR, very interesting in the fact that he's a very young investor, only 19 years old, soon to turn 20. So, JR, why don't you introduce yourself and give give everyone a just a brief background?
Sounds good. I want to thank you for having me. I am a 19-year-old dividend investor from New Jersey. I started trading when I was around 15, I want to say. I
Oh,
started
wow.
in the markets and I started regular stocks, got into options around 16. I sold options from 16 to 18. I did pretty well. And then the bear market obviously happened, was pretty over leveraged, lost a good chunk of money, and realized, you know what, this quick money isn't going to last. Let's restructure, went to dividends, and now I'm selling options against dividend stocks.
Nice. So, basically, you're seeing just sort of the the growth of passive income over time that you just know that you like, especially only being 19, almost 20 years old, you know that in 15, 20, 30 years, by the time you're my age, you're set.
Yeah, I love doing those models. I have on my account, Twitter, at JR Dividends. I have my page there. You can check all of my trades, everything I own. It's all linked in there. And there's a projection model to show in 15, 20 years where my portfolio should be. So looking at that is the whole reason I do this, seeing where I could be in 10, 15 years just by holding basic assets instead of having to do all this work day to day. That's beautiful, seeing that wealth compound over time. It's kind of undeniable to not at least have a stake in there.
Exactly. So, yeah, exactly. And that's the best part. You said it is to do less, right? You know, all that work you're putting in trading options, and you're basically probably stressing out about whether the market's going up or down on any given
100%.
day, any given hour. And with long-term dividend investing, you don't stress out about it, right?
No. And you restructure your old strategies. So whatever you used before. So I was selling 30 delta for those people who sell options. I was selling around 30 delta, went to 5 delta, which is way, way less risky. And now I cash flow my dividends and through options. It's just other ways to keep making that portfolio pump out cash.
Wow, you're doing a lot better than probably 99% of other 19-year-olds.
I appreciate that.
Speaking of that, what do your friends like? Obviously, you must have other friends in your age group. What do they think of you being an investor? Do
Yes,
they
that's interesting.
understand?
I uh I have one good friend. His name is Nick. Me and him we started selling options together, and we kind of grew together, grew our portfolios together. And he started trading super early too, so we were the same age. So it was nice to have somebody to relate to. And then from there, I got more of my friends on board with it. And those friends who do trade, I talk to every single day because there's always something new to talk about in the market. And those relationships are my closest relationships in real life. My 4 closest friends who trade, and the rest of my friends, they know at this point because it's been so long and it's kind of desensitized to them. But a
Right,
lot of people still are kind of shocked when they find out. They hear, "Oh, he's in the stock market," and they just think basic stuff.
right.
But I
And
take this very serious, and I've
that's great that you
it's been a
do.
really long road.
And definitely those other friends at the age of 18, 19, 20. Other than that close circle of your other 3 or 4 friends in that tight knit circle that understand, but your outer friends or other probably still close friends, but they probably just really don't understand what's going on.
Yeah, they either don't understand or don't care, which is kind of sad to see that with all this technology and knowing the data now. Like back then, this stuff wasn't as public to you guys. You guys didn't have like a TikTok page to send you the how to trade this, how to do that. Like we can Google anything and get an answer. So
110%.
I find it kind of crazy that people won't look into money is everything realistically. Not everything, but in life, you need money to do things. You need money to survive. You
Correct.
can't survive without money. So it's good to get yourself set up early so you don't have to struggle later. Struggle
Yeah,
now and strive later.
great point you made there. You're 100% right. At my age, as I alluded to before we started recording, um, we did not have access to Google or any other, platform to research information other than the library that was full of books that were already 20 or 30 years old, right? And
Exactly.
some of those books could still teach you about investing and the principles of investing, but nothing relevant for right now immediately, which is what the internet has provided is it gives you information right now immediately.
It's unbelievable what you can find on the internet between, like, with options. Tasty Trade was my go-to when I learned. I was 16. I taught myself how to trade options through Tasty Trade, just the website they have and the programs and the videos. And with Dividend, Twitter was how I found out about dividends, just scrolling through Twitter because I had a financial Twitter.
Yep.
And I was like, wow, this community is fantastic. And then I really looked into it, did some research, and found out this could be another avenue for me to go down. You have to look for stuff. Like, stuff's not going to come. You've really got to just go out and look.
Research, yeah.
Yeah.
And great shout out to Dividend Twitter there. And I know you and I follow a lot of the same accounts and a lot of the same accounts follow us. And it is great, and they're and all ends of the spectrum, people starting out that are, making 10 or 15 or $50 a month in dividends right up to some of those other guys that are making more
Yeah.
so on the quarterlies, but you see some of the tweets, Dividend John, where you're like,
Yep.
wow,
Dividend John's the one I was going to bring up. Yep.
you're like, wow, that's a lot of money to make in a month. Like he literally makes more in dividends than I make working a 9 to 5.
Yeah. It's his account. I think he posted yesterday. It was around 7,800, which was just unbelievable.
Correct. Yeah. Yeah. So shout out to Dividend John and great work there. But again, he's been doing this a long time, right? So
Yeah.
he's put in those sacrifices that you mentioned and done the work.
And
So
now I see him eating steak every day. He's striving now.
yeah. And I'm sure I think he still does work at 9 to 5. And I know he's got a book coming out soon, and I'm hoping to get him on this podcast. Um, and I think he does still work a job, but I'm pretty sure he could retire whenever he wanted
Yeah.
to.
Props to him for still working. I would see that paycheck in the balance every month and be like, oh, we're good now.
Yeah. I think too, though, you also get to a point in your life in your 30s and 40s, and you say, well, what am I going to do all day if I don't go to a job, right?
Yeah, that is true too. Yeah.
So I just wanted to, I guess, kind of get into some of the different sectors of um, dividend investing. Me personally, I am a huge fan of REITs. I'm very heavy into a few. So first, I know you're in the U.S. I'm in Canada. So all of
Yes.
my investments are in Canadian, in the TSX, Toronto
Gotcha.
Stock Exchange, and the only real reasons for that, it's basically two reasons. One being the exchange rate is not overly favorable to me right now, and two, I just don't want to get into the hassle of taxes, and I don't really need that headache in my life right now of owning shares in the U.S. and how that's going to affect my tax right now. Um, but with going back to REITs, one of my most favorites is RioCan in Canada. They own several retail properties across the country. They have uh, basically huge complexes of retail space where there's stores, restaurants, theaters, everything in like this huge space basically. So I don't know any REITs that you're either I don't know invested in or that are your favorites on your watch list,
Gotcha.
something you're looking out for.
So REITs, I think the main part that gets a lot of people is the high dividend yields. Right now, in my opinion, I don't love real estate as an investment, so I don't own any REITs. At the moment, I don't own any REITs, but I do want to own. Everyone owns O. I feel like that's a
I
pretty
do keep
straightforward. I see
seeing that one
everybody.
pop up on Dividend Twitter that every American and a lot of Canadians own O. And when I get to that point in my investing, I'm sure I'll take a much closer look at that one as well.
Yeah, so I try and stick more to value, and I do have a really hard time valuing real estate investment trusts because you can't use like a discounted cash flow or any type of modeling software because it's different types of income. But I would love to buy with a cheaper PE, but the one I would consider buying is medical properties, MPW. That is something I've looked at. It has a higher yield. I think it's around 9 or 11 or 12%, somewhere around there. And that's one I have considered. But REITs, for me at least, right now, not really my thing at the moment.
Okay, fair enough. Yeah, so there's a one in Canada called Northwest Healthcare, NWH, which sounds similar to the medical one you just mentioned. We'd probably have to look at those two to compare to see if they are as similar as I think, but they definitely sound very similar. Okay, well, moving on from REITs then, if that's not really your
Oh,
thing.
sorry about that. No, I was trying to look at the chart. I can't even get it to pop up. Is that a Canadian stock?
NWH, yes, it's on the TSX.
Gotcha. Yeah, that's
Northwest
probably why it's not popping up for me.
Northwest Healthcare. So energy. One of there's several. Again, going back to the Canadian market, Suncor Energy is one I own and have done fairly well on. And obviously, we're not financial advisors. I'm not saying go out and buy it, but that's definitely one
Yeah.
I would look into if you're looking at any Canadian energy stocks. There are tons of other Canadian energy stocks, but any energy stocks that you're interested in on your watch list or that you love.
I don't have an exact energy stock, but I do think going forward, this is, like you said, not financial advice, but I do think that uh, all energy in general, especially in Europe, I think there's going to be a massive volatility spike there. So that's one thing I also am staying away from because there is so much volatility in that market and so much uncertainty. I'm not going to put my money where I don't know. But I do like energy as like a whole ETF as a part of your portfolio. I think it's essential in everyone's portfolio, at least something. You want to have some
Right.
exposure to energy because it's a pretty important sector that gets overlooked a lot.
Yeah, I would tend to agree. I would definitely agree. Um, so I think I know the answer to this question, but you're looking at the European energy. I don't know if I want to call it a crisis yet, but we're obviously looking at what's happening with Russia and Ukraine.
Yeah, you get Russia, Ukraine, and also those gas bills and energy bills in Germany. I don't know if you've looked into it, but some of those bills are skyrocketing up to like $1,000 a month, which is
Well, that's because Germany is dependent on Russian oil and
okay. Yes,
gas.
yes. So I think that is definitely going to be an interesting thing to see going forward and how the market reacts to it. I mean, so far, I don't think
Right.
it's been too severe, but with what's going on over there, especially with the whole UK economy after today and Credit Suisse, I don't know. It's a little too volatile for my liking at the moment.
But again, that's why you say, hey, you know what? Dividends in 15, 20 years, I'm really not going to care what happened on, what is it, October 3rd, 2022, right?
Yeah, yeah, no, 100% in the long term. If you just need a position in the long term, I 100% say now's the time to probably start adding because we are down pretty severe and valuations aren't too bad in my opinion for certain stocks,
Yeah,
obviously.
I would definitely agree. Across the board, there are a lot of things where the valuations are low, and you can pick up basically a lot of great deals that if you're just looking for a long-term hold and that monthly or quarterly dividend payment, and you're just planning on stacking cash and dripping those dividends back in, then you know you're good to go, basically, right?
Yeah, no, if you have a long term mindset, you can never go wrong with energy. But in the short term, for me at least, I don't like to try and play the market because it's impossible. But you can justify your decisions based on your own theses, and I don't put my money where I don't know is my motto.
Very intelligent words from someone so young.
I've made those mistakes before. I'm not going to make them again.
Hey, I'm 30 years your senior, and I'm still making some of those mistakes. So the mistakes never go away completely.
I believe it. I still make mistakes now. Everyone does.
Yeah. Um, so next sector, I was thinking of just mentioning banks. Not sure. Well, banks and financial sector in general. So whether that's insurance companies and whatnot.
Okay, cool.
In Canada, we basically have uh, five, six big banks, which I'm sure you've seen mentioned on Dividend Twitter: Royal Bank, Bank of Montreal, Bank of Nova
Yep.
Scotia, uh, CIBC, Canadian Imperial Bank of Commerce, um, Bank of Montreal. So those, and Toronto Dominion. I think those are. Did I name all six of them?
I know.
And then there's also
I think
sorry,
there's one more. I'm not 100% sure. I'm not from Canada, but I do know BNS, and I know the other one you said, Bank of Nova Scotia, and the last one that you said. I'm aware of those
yeah.
two.
So BNS is Bank of Nova Scotia. RY is Royal Bank. Bank of Montreal, TD Toronto Dominion, and the others that I mentioned. And then there's also Manulife and Sun Life and some of the sort of more. They're still in the financial sector, but they're more like insurance companies.
Gotcha.
And again, so basically Canadian bank stocks, in my opinion, you can never go wrong with those. And I really don't know what it's like in the US. I know there's a lot more competition for banks with
Yes.
several more um, companies that are banks. And maybe you could just speak to that if there's bank stocks that you would be looking at or anything in the financial sector you would consider looking at.
I don't own any bank stocks at the moment, but I was looking at buying JP Morgan. That was on my list at one point. JP Morgan and Bank of America. Bank of America would probably be top of my list. I might be a little biased because I use Bank of America, but that also could
Right.
justify my I use it. I like what I'm getting from the company. So I know that the customer relationships for most people that use Bank of America are good. So my personal use of Bank of America is good. I do like
I'm the exact same way where it's like you're biased to what you use. Like for example, my paycheck is deposited into my Royal Bank account. Um, my mortgage is through Bank of Nova Scotia. My Visa is with CIBC. So it's like those would be the three banks I would invest in. I currently don't own any of them simply because they're expensive stocks.
yeah.
I mean, I could buy fractional shares, but at some point, I would probably just when I see my dividend payment one month, it'd be like, oh, I can afford to buy a share or two of this bank or that bank, and that's probably how I will do it.
Yeah, that's how I felt about. We'll talk about later. Domino's Pizza is how I feel about them too, the exact same way. But I
Yeah, actually, I have food on my list of of things to
I
discuss.
like that because I have a lot to talk about there. But
Okay,
I
perfect.
do own Aflac. That is one of my holdings, and I would like to beef that up too. And Aflac, I mean, just all around a super strong company. I believe it was 39 or
Right.
37 straight years of dividend growth. Still a super low payout ratio. I think it's sitting around 33%. And
So a
these insurance companies do
dividend
fantastic
king.
during recessions. Historically,
Wow.
they have.
Yeah, dividend king. Well, at least a dividend aristocrat, if not dividend king, with 39 years of dividend growth. That's very impressive.
Yeah.
Amazing.
What does make me a little nervous with them is their exposure to the yen and how the currency crisis is going. But I don't see it being that much of a factor in Affleck's operation. But for now, I hold them because I like the valuation, I like the dividend growth, and even if we do have a downturn from here, I would love to buy more at this price. It's a small position I have because the stock's pretty stable, but I would love to add more Affleck.
Right. Okay, so before we get into food, right around dinner time, um, I was just going to mention briefly or quickly telecoms. So again, in Canada, we basically only have, I think, four telecoms, three or four. Bell Canada, Telus, Rogers are the big three. You could probably include Shaw Communications in there. Um, I have a very small position in Bell. I've jokingly tweeted, but also kind of serious, that I want to buy enough shares in Bell that they pay me to buy Telus. Well, right?
They might as well, yeah.
So it's kind of a joking tweet, but at the same time, I'll probably do it just for the laughs, right?
You have to, yeah. You got to enjoy yourself sometimes.
um, so, but basically, also in the U.S., you're kind of the same, like three or four. You've got your AT&Ts, your Verizons, your T-Mobile. Any thoughts on the telecoms?
Um, I personally don't own any of them. I did see after their earnings report, I think it was in July, that a lot of people started buying extremely aggressive on dividend Twitter, and I do feel bad for them because it's fallen off a cliff recently. The yields are insane. I mean, the growth is there, but I feel like the stock just never actually follows what they do
Right.
operation wise. I feel like it's always a sinking ship with these companies. Like they'll report good news and it still won't go anywhere. T-Mobile is the only one I've seen stay consistently strong and grow. It's almost inverse AT&T and T-Mobile.
So, and I think in the same respect there, though, like if you've just seen earnings report from the last quarter or two quarters or the last year, it's kind of like you say you feel sorry for them, but at the same time, if they're in it for long-term holding and the dividends, there's no need to worry about them, right? It's a matter of just let it ride.
Oh no, yeah,
You
100%.
know,
But I'm pretty
let it
sure
ride.
it's down 25% since.
Ooh, that does hurt.
Yeah.
But in 5 years, if you're up 35 or 40%, then
Oh yeah.
you again going back to you're not worried what the market did on October 3rd, 2022.
No, yeah. Dollar cost averaging is
I
the
do
way to
feel
go.
sorry for the people that trade out early, right? That, oh, I'm losing money, I got to sell. It's like, well, you never lose as long as you're holding. Just keep holding, and you're good.
Yeah, yeah. But I'm pretty sure the yield on cost there has to hurt. I think it's probably like a 6% dividend to a 7%. I think probably after that fall. So you're missing out a whole
Wow.
yield on percent.
Wow. Okay, yeah. Next on my list of topics, and it sounds like you have a lot to talk about, is food. I think I only own two food stocks. One is called Pizza, and the other one is Roger Sugar. They both have a pretty decent yield. Pizza pays a monthly dividend. Roger Sugar pays quarterly, and I'm pretty happy with both of them. I think I'm up on both of them right now, so that's
That's
always
very
nice as
nice.
well. But I'm just again not overly worried about the ups and downs because I'm holding them for an extremely long term and almost wishing that they would go down so that I could dollar cost average down on them to buy more.
Yeah, right now I don't even think I have a Domino's Pizza position. I might have sold out of it. But I did hold Domino's Pizza, and I do like the valuation at this price because I'm actually just seeing it now. Yeah, it's around 316. I had sold out. I think the PE was around 28. It was around 400. I'd sold out, but I bought around 340 valuation. I mean, it's a little expensive on the PE side, but the high institutional ownership made me pretty confident. Along with, I don't recommend doing this, but a lot of hedge funds do hold Domino's Pizza, so I did kind of swing it, even though it is a dividend stock. I did plan to hold it. Made a good return. Sold out. Can't complain about making money. But I do like Domino's.
Never a bad time to take a profit.
I like Yum Brands. I think they'll both stay strong through a recessionary period. I'm pretty sure Domino's, the last time they have had a losing quarter was one quarter in 2008, and then they did even better the quarter after.
Wow.
So they've held strong through the past three recessions, I believe it was 2008, 2009, and then 2020, if you want to consider it.
Yeah, right. Well, that was. I'm not even sure I'd call that a recession. Just it was a what a WTF is going on here.
Yeah, but yeah,
right? In
I
March of 2020.
Yeah, that was an interesting month to be part of the market.
Yeah.
But
no kidding.
But fundamentally, they've stayed strong. They've grown, and historically, if you do look at their returns, it is quite ridiculous what they've been able to do. And their same store sales is what they mainly use their valuation metric off of, and that's still growing globally. They're still growing. I see no problem owning the company. The company is growing. The stock price isn't following. That's a good thing, in my opinion.
Yeah. So, and you're 100% correct. Any retail, whether it's like a retail food like Domino's or McDonald's or any chain restaurant or even retail clothing or retail anything, that same store sales year over year is, in my opinion, one of the most key metrics, right? Because that means that same store that's basically still drawing from that same demographic around them is somehow drawing more
Yeah,
more of that same demographic or earning more from that same slice of the pie in the population of that city or town that they're in.
yeah, exactly. I can't remember so I watched somebody from DivTwit's YouTube video, and they brought it up. I want to give them credit, but I cannot remember who it was. So I'm sorry if you're not getting your credit. But you brought
I
that to
have
me.
not I have not seen that video, so I'm not sure who it would be either. But yeah, shout out to whoever that is. If that's you, mention yourself in the comments below.
It's one or two people,
Okay,
but I don't want to
awesome.
give them the wrong credit. So I'm just, whoever it was,
Right.
thank you.
Yeah. 10 people take credit for it. Anything else in food that you're interested in?
Nothing else in food that I own. I think I brought up Yum Brands, but it kind of goes the same with Domino's, where Yum Brands owns, pretty sure it's KFC, Pizza Hut, Taco Bell, all these companies. Same store sales is what drives the growth there, and same store sales. It's tough to say, is growing for the majority of these companies. So Yum Brands as a company still growing, and it's at a more expensive PE compared to the market, but you got to pay for that growth.
Right. So there are a few other ones in the Canadian market that I've looked at. Um, we have one called Boston Pizza. They're very interesting. I've watched them for a very long time. We have A&W. I've watched them for a very long time. I don't own any of these, but they're definitely been on my watch list for a long time. Um, RBI, Restaurant Brands International, is very, very interesting to me because they own Burger King and Tim Hortons. And I'm obviously you're aware of Burger King. Do you know what Tim Hortons is?
Yeah, I've heard of it. I've never been to one.
So yeah, Tim Hortons is basically like the Canadian version Dunkin' Donuts, except way better, like just way better.
That's yeah. Dunkin' Donuts is not good. I don't care what anyone in America
I'm just
says.
making the
Oh
comparison
no,
of like coffee and donuts,
gotcha,
right?
gotcha, gotcha.
And so basically, they're coffee donuts, sandwiches, soups, that kind of thing. And yeah, so the combination that RBI owns Tim Hortons and Burger King, and I think in a couple other chains as well. I can't remember which other ones, but just those are the kind of their two anchors of Burger King and Tim Hortons. It's a very interesting one to look at as well.
I just from a consumer side, I love this idea because I don't think Dunkin' can keep this market share. I could see them making a good run for it. Just off, I haven't looked at anything, but just off assumptions,
Right.
that's pretty impressive. I've never even heard of RBI.
So I guess, yeah, definitely look them up.
Yeah.
Restaurant Brands International. They'll be easy to find and plenty for you to research.
Yeah, no, I'm definitely bookmarking them.
Not that I'm trying to give you homework. Yeah, I'm sure you have enough of that.
No, I'm looking. Believe me, if there's money to be made, I'm gonna look there.
And then the last one on my list was healthcare, which we mentioned briefly already. With me having the Canadian version, Northwest Healthcare, NWH, and I'm sure there's others. There's actually another one that I've been on my watch list for a really long time. It's not exactly healthcare, but it's called Chartwell Residences, which they invest in long-term care retirement homes,
Okay.
which is obviously aging population. That's one that's just been on my radar for a very long time. And I've actually joked for so long, it's like I need to buy that so that I own some of it when I'm ready to move in. Any other healthcare on your radar?
The only healthcare companies, I don't even know if to call them healthcare. They do have market share in healthcare. Would be 3M and AbbVie are my two holds in that position. And I still hold those positions, so those are my two. And 3M is one of my larger positions. So I will say that I do believe in 3M as a company a lot.
Yeah, 3M is a great company, and obviously they have their fingers in several different pies, including healthcare and so many others. And yeah, I don't think you can go wrong with 3M. Again, going back to my personal, I just don't own American stocks right now,
Gotcha.
but who knows? Someday down the road, maybe I will.
Yeah, so 3M, I believe I don't know what they're doing exactly. During their last earnings report, they said that they were separating the businesses into two separate entities, one healthcare and one like consumer. So I guess it is going to be a full-blown healthcare company in the coming months. I don't know if it's going to be a separately traded share or, like I said, I don't know how it's structured. But I do also own AbbVie. It's a smaller position, but the dividend growth, the company growth, it's not a company I've actually researched because I have a super small position. But 3M is something I really believe in. That lawsuit is a temporary thing. Like you're saying, in 10 years, nobody's even going to remember the lawsuit.
Right.
And they might.
And we all know 3M is still going to be around in 10, 15, 20 years. So that's not.
Yeah, it's undeniable. And what was the other thing I want to bring up with 3M? I think in the future, I think a lot of people on Div2 are talking about it too. The possibility of a dividend cut, which would end their 63 years of growth. But it's yielding almost 6% right now as a blue chip stock, essentially. If they cut the dividend, I mean, you get 5% and you get more growth in the actual company with free cash flow. So I don't even see a problem with them cutting the dividend. If they do, I almost think it's a good thing. I think it'd be bullish for the stock that they have to pay out less money to shareholders.
Right.
And I'll take a short-term dividend cut if it means I could either buy more if the stock falls or the stock rises. So it's a win-win in my opinion, no matter what they do.
Wow, very interesting. Very interesting perspective. Okay, well, that's sort of the end of my list. And what else? What else would you like to talk about? Any other burning
Like you said, you're not in the American markets, but I think the one thing that everybody should have in their portfolio, besides the VU and the SPY, is the SCHD. I think everybody on Dividend Twitter preaches SCHD. I don't think I've seen a single account that doesn't own it. I don't want to tell you what to buy, but it's an ETF. You got 100 of the
Yep.
best companies into one. I mean, you have 3M, you have I think AbbVie's in it too. I know they have Texas Instruments, Coke, Merck, Pepsi, Home Depot. Like, you are so diversified in so many different industries. Great dividend yield right now. Strong ETF. Historically, has performed well. I love SCHU right now.
Yeah, that one sounds really good. That sounds like a very good mix for an ETF. Like, again, those companies, they're companies you can't go wrong with, right? Coca-Cola or Pepsi and Home Depot or Lowe's or all of those. It's like, they're going to be around in 15, 20, 25 years, and in 10, 15, 25 years, they're all going to still be making money. So
Exactly.
if you have an ETF that's invested in all of them, you're definitely doing well.
Yeah. And I mean, right now the market's down. You don't want to try and pick individual stocks. Just buy an ETF. Just make sure you
Yep.
set yourself up right now. If you just dollar cost average an ETF for the next 3 years, I guarantee you in 10 years, there's a very, very, very high chance you'll have more money than you do then.
Yes. Yeah. Don't want to say 100% chance, but that it's it's up
Historically,
there. Yeah.
yeah, it's
Historically, there's no reason why it's not going to be a 90 or 95% chance.
yeah. But
And
just
plus, you'll
dollar
be
cost
making
average, might
dividends
as
all the
well.
way along in those, say, 10 years as well.
Entirely.
Cool. Anything else on your radar?
Um, Not really. I mean, outside of dividend paying stocks, I do own a good share of Disney. That's one company I also believe in. Same reasons I've listed all through here, all the things I look at, free cash flow. I mean, Disney with COVID, it's been pretty ugly, but their old free cash flow is fantastic. Companies that grow, companies I can buy at a cheap valuation. I like looking at Disney, arguably cheap, arguably not cheap for other people. But those are my number two things on my watch list: SCHD and Disney.
Wow. Awesome. Yeah. Disney, obviously, again, great company. I know they've had um, some issues in the headlines over the last year, but I think the last year or two. But I
Yeah,
think a lot of
100%.
investors just kind of brush that aside and sort of say, I don't care what the headlines say. I care what the bottom line says.
Exactly. And you know what companies can do in the past, what they have done in the past. As long as Disney can just rebound off the COVID lows and continually grow their cash flow every quarter, grow the profit every quarter back to at least 75% of where it was, I'd be happy as an investor.
Right.
Because that's what I've projected, at least 75% of what they had, and I should make money on my position.
Yeah, and there's no reason why they're not going to go 75% or more, really. Like, realistically, Disney's going to keep churning out the content, and that content is eventually they're going to hit another few winners that are, as big as their biggest ones of the past, right?
Exactly. And I always tell my friends, and they're like, oh, why do you have so much Disney? Why do you like Disney so much? There's nowhere else in the world that I can tell you now that my kids will want to go just as bad as kids now want to go is Disney
Yeah.
World. So in 10 years, my kids are still going to want to go to Disney World. Disney's still going to be there. Kids want to go to
Yeah.
Disney. People go to Disney.
The same as kids wanted to go to Disney 10 years ago, 20, 30, 40 years ago, and it's going to be the same in 10, 20, 30, 40 years, right?
Exactly. Only some companies can really do that to a consumer, and I think Disney's one that really locked consumers on. And it's almost like part of our lives to a degree. Like, kids grow up watching cartoons, and it's Disney
Definitely.
cartoons or all the other stuff. It's almost indoctrinated in them. So
Well, you know, you can't. There's no kid or adult who hasn't seen Bambi or Cinderella or just name all those top 10, 15, 20 Disney classics. Everybody's seen them, and that's what I was alluding to. The content, they're going to churn out more of those over the years. Aladdin is one of the more recent examples, right? Where they're going to keep coming, so there's no reason to believe that that company is going anywhere for sure.
oh,
That's
100%. And they
I
keep
agree
adding to
with
their
you on
media
that bit.
business. I think
Pardon?
they bought ESPN a few years ago. They own a television station in South America. I think it's one of the news stations. So they're even expanding outside of the U.S. So I would
Right.
love to see that in the future. If they can keep expanding outside the U.S., they were going for a cricket deal somewhere. I love to see those things because that's growth
Yeah.
in industries and places that haven't even been reached.
Yeah, definitely. Yeah, and obviously, like, North America, we have sort of our top 4 sports of, football, baseball, basketball, hockey, but there's so many places in the world that don't care about any of those 4 sports, like you mentioned, cricket and or, obviously rugby and other sports where other parts of the world and, obviously European football, soccer is massive, and, we're in this little bubble in North America thinking everything is just these 4 sports and maybe count golf as a 5th one, but other than that, it's like there's so much of the world that does
Is
not watch the
underdeveloped.
sports
Yes.
we watch, right?
I completely agree. And I'm glad you brought up the perspective of people only thinking regionally, because that's what a lot of investors I noticed do too. They only think of the US. They don't think of that overseas expansion, that growth in other countries and investing in other countries. Because when companies expand overseas, you see they can become $1 trillion companies. All the $1 trillion companies are global.
Yes. Yeah, well, look at Apple,
Yeah,
or
exactly. And
Microsoft.
Apple can keep growing. There's so many countries that don't have phones, don't even have internet. They might have a $2 trillion market cap, or 2.7. I know it's been falling, but whatever it is, that can, as insane as it sounds, it can still grow.
Yeah, I agree. I agree. Even though I personally don't care for Apple products, but that's my own opinion.
I don't either. I'm with you on that.
Okay, awesome. Well, I really appreciate you coming on the podcast.
Thank you for
Um,
inviting me.
no problem. I definitely want to have you back every 6 months or year, especially at your age. I think you're a very interesting case study that we want to watch you grow, and you're definitely going to be um, one of those people on Twitter in 5 or 10 years that are the inspiration, like Dividend John, who tweets out about um, how at one point he had a mentor and now he just hopes to help and encourage and mentor other people. So I can definitely see you in that role in 10, 15 years.
I appreciate that. It's exciting. I did start. The only reason I started was for myself. I wanted to have my logs of what I was at this time and how I grew over the time, because it's a long game.
Yep.
I'm only at 100. I've been doing it for 3 months aggressively,
Right.
very aggressively, and it's a fun game. I want to be able to see where I start, where I grow to, and I'd be so happy if people look back at me and they're like, "Oh, he had 50 3 years ago, and now he's at this." There's no reason I can't, because I did it. You can do it too. There's absolutely no reason you can't.
You mean
So,
when you say 50 or 100, are you talking about per month or?
annually is what I was referring to.
Okay.
But whether it's monthly, annually, no matter what, if you just see that growth, someone else grew over time. They started at
Yep.
this, they grew to this. And Bristol is really what got me going. I saw him start at like 8,500, I think it was back in the day. And then I saw him go to 8,700. And I was like, wow, like this really does grow over time. And that really is
Yep.
what got me into dividend investing, was seeing all these PIDIs go up just as I follow these people for longer and longer times.
Definitely. Definitely. Yeah. I couldn't agree more on that one. And so I think we'll end it there. Thank you again for your time, and
Thank you for having me.
definitely want to have you back on at some point in the future.
Send me a message. I'll be here.
Definitely will do. Thanks
Have a good
again.
one.
Okay, I ended recording.